For about 15 years, I've been saying that the economy and the stock markets are both psychological and psychological. And here is a depiction of the psychology of a market cycle. And what you see here, this is the cycle, and it repeats and it repeats. It is a cycle. And it's the emotion, and they've shaded the emotions here of despair, fear and despair, and hope, and then elation and confidence and greed, and then anxiety, and going back into fear and despair again. And you see this disbelief, this rally will fail like all others, and you're not in the market yet. This rally might be real. It's time to get in fully invested is the belief, the thrill. Buy more on margin. I got to tell everybody to buy. Euphoria, we're all going to get rich. I remember the peak of the NASDAQ bubble, the tech.com bubble. All of my friends were getting rich, and I wasn't, and they were telling me I've got to get into the markets and stuff. And I was thinking, you can't all get rich for free. There's got to be something wrong here. And I just felt like it would end badly, and it did just a couple of months later. Complacency, I don't know if this is much complacency as false hope. People that are buy into the dead cat bounce. In 1930, there was a dead cat bounce, late 20s, early 30s, and that led to more money got sucked in, more currency got sucked in to the stock market in the late 20s, early 30s, and lost than the people that lost in the initial crash. And but we're in this dead cat bounce right now with our stock markets. I don't believe that you're ever going to see the highs that we saw in February in the S&P or the Dow until the stock markets do a crack-up boom where they exceed those previous highs solely because the Federal Reserve is hyperinflating the currency supply and buying stocks. But then you go through the anxiety. Why am I getting margin calls? This dip takes longer than expected. Denial. My investments are with great companies and they'll come back. Panic. Everyone is selling. I need to get out. And then finally the capitulation. I'm getting 100% out of the markets. I can't afford to lose more. And then anger and depression. My retirement is lost. How can I pay for all this new stuff? And so that's really part of the market cycle. But remember, we're in this dead cat bounce. This ship can't be sinking. My end just rose 200 feet. I really believe that this is what's going on right now. Now, getting to the homepage at goldsilver.com. Gold-silver ratio up at like 116 today. I think this peak here was probably 116. This is 115.7. But this article here, bankers warn Fed mortgage purchases unbalanced market, forcing margin calls. Now, this was a good article, and it leads me to recall another article from last week that I want to show you. But this article says, ironically, the Mortgage Bankers Association had urged the Fed to come in strongly to help the mortgage market. And a quote here from the chief economist at the Mortgage Bankers Association: we understand that when the Fed came into the market, they couldn't come in surgically. They didn't have a scalpel. They only have a sledgehammer. I love that. Now, this is somebody else saying this is a collapse of the system. Now, that might be an exaggeration. This was somebody else that they had interviewed saying this, but what's happening is the Fed wanted to drive down rates, and they did by buying a whole bunch of mortgage-backed securities all at once, and it pushed the rates down. However, these mortgage brokers, when they lock in a rate and they give somebody a rate quote, that rate gets locked in by purchasing a derivative. And that derivative neutralizes the fluctuations in the interest rate so that they can give the person the interest rate that they promised when they quoted the loan. And so they lock in that rate, and what that derivative does is it does the exact opposite of whatever rates are doing. And the reason they do this is because if they quote a loan and then the rates go up, they end up having to take the loss of the difference of, they are offering a loan at a rate lower than what the mortgage broker is actually going to have to pay for it. And so they take out these derivatives. However, in a case like we've got today, where you've got this pandemic, and people had applied for a bunch of loans, and then the pandemic happened, and so rates were locked in, but they never closed the loan. They never finished it. That broker was suddenly getting these huge margin calls on a loan that is not going to be completed. And so there's tens of millions of dollars of margin calls coming in, and they're losing. And it could be a pin that pops a bubble. And the bubble is this next article here from last week. This is the fear chart that the smart money on Wall Street is watching. And it's simply the loss in value of the stocks from mid-February to last week of Citigroup, Ameriprise, Prudential, Lincoln National, JP Morgan, Bank of America, Goldman Sachs, Morgan Stanley, and Deutsche Bank. So all of these stocks are falling. And then in the article, you read that Citibank is the poster child for everything that is wrong with the banking structure in the United States today. After blowing itself up with derivatives in 2008, in December 2014, it got the repeal of a key component of the Dodd-Frank financial reform legislation that would have forced derivatives out of federally insured banks. Then, in 2016, it went full speed ahead into the very derivatives that were at the heart of the financial crisis of 2008, credit default swaps. Citigroup is not alone in loading up on derivatives again. Together with JP Morgan Chase, Morgan Stanley, Goldman Sachs, and Bank of America, these 5 bank holding companies now control derivatives amounting to $230 trillion, representing 85% of all derivatives held by U.S. banks. Now, the GDP of the United States is like 21.7. This is about 11 times the size of the U.S. economy. It's more than 14 times. It's almost 15 times the size of the M2 currency supply, 230 trillion. And then it goes on, and their counterparties are just as questionable as they were at the peak of the crisis in 2008, which led to the biggest Wall Street bailout in U.S. history. Man, this is history repeating again, except it's been amplified. If we go into bailouts, the currency creation here will be astronomical, and it could lead to, if the Fed starts creating currency on the scale they may have to, it could lead to this crack-up boom where the markets do recover and they exceed their peak. But valued in gold, they will be falling, even though the public will be seeing new all-time highs in the stock market. But we are, I believe, in that dead cat bounce. On the radar, Sam Friedman, Zoom is now Zoom. This is a conference calling program. This is, it's a website. I'm sure that they've got a bunch of infrastructure, server farms and such. So it's not cheap, but it's now valued at 50% more than all the U.S. airlines put together. I'm just going to let you sit on that one for a second and sort of contemplate that. Chart of the day. This is from Silver Watchdog. Major fiat currencies have hit a record low against gold. So thank you, Silver Watchdog. And this was when gold was in a bear market throughout the 80s and 90s. This chart goes back to 1982. This is 1999 when gold bottomed, and then gold was going up. And so this is the value of the fiat currencies measured in gold. And this is a basket. This is the XDR. XDR, it's the SDR. This is the symbol on the Forex for the SDR, which is the IMF currency, the World Bank IMF currency that the central banks use. This currency only exists inside the accounts that the central banks have at the IMF or the World Bank. I'm not sure which right now. And then it's divided by XAU, and this isn't the stock market index of mining companies, the XAU. This is X, and then AU is the symbol for gold. And so this is just divided by the price of gold. So it's this basket of currencies that make up the SDR, which is the US dollar, the euro, the Japanese yen, the Chinese yuan, and the British pound. So you make this basket of all these currencies. It's mostly weighted toward the US dollar, but with all of the other currencies in there, the dollar makes up about 40%. And what you see here is that if you flip this chart upside down, you have gold's performance against those currencies. This is the bear market in gold of the 80s and 90s, and this is the bull market this century, and gold is setting record highs against the major basket of currencies that the International Monetary Fund and the Bank for International Settlements and the World Bank, this is sort of their standard, their gold standard, and gold is beating their gold standard. I want to welcome the almost 3,000 new subscribers. Thank you very much. And don't forget to hit that notification bell when you subscribe. And if YouTube unsubscribes you or unnotifies you, just go back and hit them again. Viewer feedback. This is from the last video that I did. And Garand Newbie says, the beginning of wisdom is to call things by their proper name, and he's quoting Confucius. Applies to money versus currency. Thank you so much, Garand Newbie. FQ says, man, Mike Maloney for me is like Morpheus for Neo in the scene where he had to choose between the red pill and the blue pill. I choose to be awake and know the truth. Thank you. And the interesting thing about this is my friend David Morgan, from themorganreport.com, also silver. He's the silver guru. Silver-investor.com is another one of his websites, but themorganreport.com. Just do an internet search for Escape the Matrix, and he spent some money on this a while back. This was back in 2010, and you'll see he's not holding a pill here. He is holding a silver coin. And you can choose to wake up from the matrix, wake up from the dream. Memes of the day, but first, get my book, goldsilver.com/free book. Subscribe to the channel. The book takes seconds to download. In 30 seconds, you can be reading it. Forward it to everybody that you know. I don't care. I don't want to make any money on the book. What I want to do is have everybody have that book and protect themselves. The memes, give me liberty or give me $1,200. I'm sorry I'm laughing because this is very sad what we're going through right now. But this is a funny meme, and it's true. The more you get from the government, the more to have the government be the safety valve for everybody means that we have to give up individual liberty to get that temporary safety. SpongeBob SquarePants says, when somebody took 25% of your money, he doesn't understand the difference between currency and money, by the way, and then gives you 2% of it back, that's stimulus with magic rainbows. I think this is absolutely hilarious also. And then, massive economic collapse, $1,200! Hooray! So, this is sad, and I'm smiling and laughing just because it is comical, ironic. This is a horrible thing that we're all going through right now. I do believe it's going to get a lot worse before it gets any better. And so just remember the psychology of a market cycle. Thank you very much for watching. We'll see you next time.